Hello there, welcome to the last edition in this particular week of Global Business Africa. We've got plenty of content lined up for you as usual, the usual mix of all the key business news stories you need to know about from across the African continent. Here's what we have lined up tonight. Royal Dutch Shell is selling its onshore interests in Nigeria. We'll be looking at the implications. West African economies continue to take the hit from Ebola.
Foreign direct investment will be affected because private sector, maybe very few to take risks to go there and to settle there and to invest there.
And we'll be looking at online advertising and how it's transforming the ad scene in Uganda. Let us begin in the commodities sector, specifically with news that Royal Dutch Shell has wrapped up the sale of its stakes in 4 Nigerian onshore blocks, which it put up for sale following a 2013 review of its business in the country. The firm has sold its stake in OML 18, 24, 25 and 29. In addition to that, it's also selling off its side of the Nembe Creek trunk line. Shell sold 30% of its interest in the 4 blocks, while Total and Eni are selling their 10% and 5% stakes respectively. 55%, however, will be retained by the Nigerian National Petroleum Corporation under a joint operating agreement with the buyers. The sale of the 4 assets will bring the number of oil blocks sold by Shell in the last 4 years to 12. The company previously sold its stakes in OML 4, 38, 41, 26, 30, 34, 40 and 42 to local investors and their international partners. Now, the Sudanese President Omar Hassan al-Bashir has been meeting his Egyptian counterpart Abdel Fattah el-Sisi. These two leaders didn't just talk about politics, however. Yasser Kim highlights the business relations between these two neighboring countries.
There might have been thorny issues to discuss, such as the Libyan crisis and terrorism, but economy was high on the agenda of the talks.
The ties between Egypt and Sudan have never been stronger. There is the river and sea route linking both countries, and a third highway road on the east of the Nile will be open next March to bring us even closer together.
The new highway mentioned by the Sudanese president will reduce the road trip from 17 hours to only 4 hours. This road, experts say, will increase bilateral trade by 50%. It currently stands at around $1 billion, mostly Egyptian exports. But Sudan will benefit from the increased trade.
Egypt needs cattle and meat, which Sudan can provide at lower prices than other suppliers. Agricultural products are also essential for Egypt. With the latest transport facilities, Egypt can import larger quantities from Sudan to cover its needs.
Investments have been flourishing too. Out of $12 billion of Egyptian investments in Nile Basin countries, $8 billion are in Sudan alone. But that's not all. Studies are underway to finalize a new road that will not just link Egypt to Sudan, but all the way down to South Africa. Yasser Hakim for CCTV, Cairo.
Now, speaking of South Africa, the MTN group over there plans to lay off about half of its 815 managers down there. That's well under the number of job cuts predicted by union officials, however. Africa's largest mobile telecoms operator is facing increasing competition at home and abroad. In order to cope, it started a cost reduction program in August. The company says 240 managers have taken voluntary retrenchment packages already. Now, this reduction in headcount may cut the employee cost to revenue ratio and bring it down to about 4% from the current figure of about 7%. MTN South Africa's Chief Human Resources Officer, Themba said the company had not issued forced retrenchment notices, and if the need to do so arose, it may do so at the start of November. We're still in South Africa. That country and Kenya have signed a memorandum of understanding to support each other in improving port services. The deal to that effect was signed in Durban Harbour earlier on Friday. and it aims to help both sides solve common problems ranging from a lack of deep-water berths to poor equipment, limited infrastructure, limited training, and of course the big one, a lack of capital to develop port infrastructure.
Within the Port Management Association of Eastern and Southern Africa, we have agreed that the ports authorities of the different countries would work towards regional integration. Also within Transnet, within the context of the market demand strategy, regional integration is a key pillar of the MDS.
Our port authority in Kenya is both a landlord and an operator. We are trying now to move out of operation so that we can have private operation in one of our terminals. This MOU comes at the right time for us because we want to learn how it's being done here. And in this part of Africa, especially the port of Durban, is number one.
On to the business of broadcasting now. Africast is a biennial conference. It brings together broadcasters from all over Africa to talk about issues pertaining to the industry. The latest edition of this event started earlier this week in Nigeria, but it also comes at a fairly crucial time for the broadcasting industry over there. You see, Nigeria is preparing to make the switch from analog to digital terrestrial broadcasting, and the focus this year is on content. Organisers believe that having quality content readily available will be absolutely crucial in making digital broadcasting a success.
Nigeria is home to the second largest movie industry in the world. The number of movies produced here is surpassed only by India. It makes sense then that the 10th Africast conference took place in Abuja. Hosted by the National Broadcasting Commission of Nigeria, the theme this year focused on digital broadcast content.
As you are well aware, digitization is not just about technology. And we have tried at the MDC to focus attention, perhaps not away from the technology aspect, but also to emphasize that content is very, very important.
Equally important is how the media helps educate and inform its citizens. Nigeria was declared Ebola-free earlier this week, and the media was credited with playing a major role in helping Africa's most populous country contain the virus.
If you look at the success of how we contained this virus, the media played a crucial part. And I think that, for all of us in this room, all of us involved in this industry, I'd like to really commend all of us for excellent work.
At the conference, there were exhibitors from the US, South Africa and Singapore. They were either digital equipment providers or digital TV or radio operators, as well as program purchasers. Star Times was the only Chinese company represented at the event. It operates digital TV in 13 African countries with around 300 channels. It launched 9 new channels in Nigeria. The event was held on the sidelines of the Africast conference.
I'm proud Star Times now we covered 32 states, about 34 cities. So until we are still ongoing. And I believe end of the year, according to our rolling plan, we will cover remaining states and cities this year.
So far, Star Times has more than 70 channels in Nigeria, more than 20 of them self-created. For only $6 a month, subscribers have access to many more channels, including a Pidgin English channel. They're also introducing Chinese films on their platforms.
Our slogan and guideline is to let every family be able to enjoy an affordable and quality digital TV programs.
Recently, Star Times put to market some movable digital terminal products like mobile phone TV and vehicle TV. One of the shining stars in this exhibition was the projector with an inbuilt decoder. You can either watch TV through its screen or project the program anywhere on a wall. Another is the solar battery system that can provide low-consuming power for the projector for up to 5 hours. A combination of the two is a good choice in areas prone to power cuts. Valdi Carlsa, CCTV.
Quick run through the equity markets here for you. It's a fairly subdued day right across the African continent. Nigeria, South Africa and Kenya all ending the day in the red. In the case of South Africa, however, the indices dragged a lot lower by counters like MTN. Producing some surprising news, it's actually struggling in Nigeria. It had forecasted it would have 5 million new subscribers on the network by the end of the year. Now it's cut that down to just over 3 million. When we come back, we'll be looking at small entrepreneurs in South Africa. They're demanding a different tax regime to remain afloat. And in West Africa, the economies are still being badly affected by Ebola.
Be affected because private sector, you know, maybe very few to take risks to go there and to settle there and to invest. So it affects the whole economy.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Ten minutes into the hour, you're still watching Global Business Africa from the Kenyan capital, Nairobi. South African SMEs need to be taxed differently and not in the same way much larger corporations are taxed. That was just one of the strong messages coming out of a meeting of SMEs in Johannesburg. Delegates attending that event agreed to collectively submit a proposed strategy on how to make it easier for SMEs to thrive and do business to the Small Business Development Minister, with a strong emphasis on tax breaks and government incentives. Angelo Kopler has the details.
Delegates here have developed a range of action items that will be considered by the minister.
The resolutions that we're coming up with are going to empower the strategic document that the ministry has been working on, because the ministry wanted inputs from practitioners of the small business sector, not the SMMEs themselves, but the people who have a macro and helicopter view.
Having a big picture view is important for government strategy, but business is about the bread and butter issues.
My key challenge is the financial resources, basically, because I'm also doing with the events, and it also includes logistics, and it's the day-to-day running of my business and just the sustainability of it.
The biggest challenge really is, I think, lack of empathy for the challenges that us SMMEs face on a daily basis, like issues of payment. I mean, as an SMME, once you have spent your money delivering a service to a government, in most instances that's, well, the last money you have. And if you do not get an appropriate response in terms of timeous payments, you are going to suffer.
There appears to be no short-term solution to this problem, but it's hoped that it will be sorted out in the medium term.
We are confident that in 2 years' time, the outcomes of this conference will be seen in the programs that will be driving small business, because we are interested in programs and not legislation.
It seems that small and medium enterprises all face the same challenges. They relate to money, whether it's being paid on time or finding funding to grow and become a big company in the future. For the ministry to work, it's going to also have to work with all the other departments in the government so that everybody understands that SMMEs are a priority sector. I'm Angelo Kopler for CCTV in Sandton, Johannesburg.
Now, it's an open secret that Ebola is spreading like wildfire in different parts of the world. but it's most concentrated in 3 countries in West Africa. The virus so far has killed over 4,500 people, and it's essentially cut economic growth in Liberia, Guinea and Sierra Leone. All 3 have trimmed their growth forecast back, citing weak business activity. Here's Dr. Rene Kouassi, the Director of Economic Affairs of the African Union, in a conversation with Girum Chala, breaking down the effects of the disease on these economies.
This has an impact on the financial flows to the country. Financial flows, because, you know, African countries, they need ODA from public sector and foreign direct investment. And foreign direct investment is very needed because it has a huge impact on the economy. And these investments come from private sector. So in the 3 countries, one of the immediate impact is that the foreign direct investment will be affected because private sector, you know, maybe very few to take a risk to go there and to settle there and to invest there. So this is very, very critical for the countries. Another economic issue is the tourism aspect, because tourism also, you know, is one of the ways to mobilize resources for economic development. So that has created a psychological effect. People are afraid to go there, and as you know, some countries at the beginning have closed the border, but now fortunately the border has been open, and some airlines refuse to land there. You know, so the tourism is affected. We can say also even the productivity of the economy, because the farmers have stopped their activity, even the private sector, they cannot operate properly because you have to import inputs, you have to export your outcome and so on. So this is also affected. And even the schools have been closed, even the exportation of the countries. Because if you export, for instance, fruits and so on, you know, this psychological effect can say, okay, maybe the quality, because of sanitary, etc., if you continue importing fruit from these countries, the importer country can be affected. So economically, you know, the impact is very, 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 very huge for the country.
Leaders in the European Union have agreed to cut greenhouse gas emissions by 40% by 2030. That makes the bloc's new climate targets the world's most ambitious. The announcement of that came at an ongoing 2-day meeting that's also focusing fairly heavily on how to contain the Ebola epidemic. CCTV's Jack Barton found this report from the European Council in Brussels.
The European Union will lift its current carbon emission target from a 20% reduction of 1990 levels by the end of this decade to a 40% cut by 2030.
It sets Europe on an ambitious yet cost-effective climate and energy path. Climate change is one of the biggest challenges of mankind. Ultimately, this is about survival. It is the example of a long-term policy.
Over the same period, the bloc also wants to ensure that renewable energy technologies like wind and solar provide 27% of the EU's energy and see energy efficiency rise to the same level. Concessions were granted to some countries that will be economically harder hit than others. The new targets could also be reviewed if other non-EU countries do not come forward with comparable commitments at a major United Nations climate summit in Paris next year. European Union leaders also discussed boosting efforts to help contain the spread of the deadly Ebola virus, including the creation of a new position of special coordinator with the United Nations to help develop a more effective response to deal with the epidemic. Britain is pushing the bloc to create an Ebola fund, totaling more than $1.2 billion, about double the EU's current commitment.
Britain has been leading the way in terms of Sierra Leone. We've already pledged over £125 million. We've got military and other forces going to that country to help, but we need other European countries to do more.
On Thursday, leaders pledged the equivalent of a further $31 million towards developing a potential vaccine for the deadly virus. Officials here say leaders are focusing on these key issues at this two-day meeting so they can devote the rest of the year to combating what the European Council President has described as the bloc's historically unprecedented economic stagnation. Jack Barton, CCTV, the European Council in Brussels.
Yes, again, with regard to commodities across the board, another day of red ink straight out, including, of course, Brent crude oil. However, of interest to you would be the fact that Nigerian oil exports are set to drop to about 1.7 million barrels of crude a day sometime around December, from about 1.9 million next month. We'll certainly be keeping tabs on how exactly that affects its government spending moving forward, right here on Global Business. We're diving into the ad world next in Uganda, looking at how online advertising is displacing traditional print, tele and radio ads.
BizAsia. Asia means business.
Just after 18:20 GMT, you're still watching Global Business Africa. Now, Uganda's advertising industry is growing fairly fast, and that's partly thanks to rising demand for goods and services from a middle class that is also growing fairly quickly, and a rise in internet connectivity as well. Now, companies there are now trading in television and print ads, the traditional bastion of advertising, for strong focus on online marketing and online advertising to entice more customers to buy their products. Johnson Yange has the details on Grassroots tonight.
Websites as #1 in all.
Edward Sabrie starts out with a brief of the day's work. He runs an internet advertising company. His clientele has grown from just 5 companies to over 400 in 4 years. Sabrie says the demand for online advertising services in Uganda is rising.
8 out of 10 of those we reach express interest, much as it may be like 2 buying out of 10. 20% buying, it's very good. Even though it's 1% buying, still it's very good. So what is limiting us is only our ability to reach out to all the investors and the potential market. But otherwise, people are adapting it, and whoever gets to know gets excited with the service, and they actually put in big money.
Growth projections for the country's online advertising industry are substantial because of cheaper smartphone usage and internet availability. About 5 million Ugandans have access to the internet. So many firms are using cheaper online platforms to reach consumers.
In a month, you can be able to advertise on Facebook or Google using the pay-per-click ads for just $100. and the coverage is actually global coverage. As opposed to other methods like TV, you may have to part with $1,000 or $2,000 just to run one advert.
As a result, companies are slowly moving away from traditional advertising like newspapers, magazines, radio, and television. While some small and medium enterprises with limited advertising budgets are taking on more affordable alternatives to get their products known, sector players reckon that traditional advertising still has an influential role to play.
What we are seeing now is not the death of traditional advertising, because it still holds a certain very strong credibility for traditional buyers and people who have money, for the older demographics. What we are seeing is what we're calling the hybriding. It's a trad-digital approach where people and brands are using traditional methods to get people to digital platforms. So the ad, for example, ads will always end with find our Facebook page or follow us on Twitter or go to our website for more information, because the traditional methods are still being consumed.
While Uganda is slowly making gains in online marketing, countries like Nigeria, South Africa, and Kenya have made tremendous progress. With traditional advertising still trending, enterprises will be looking to spending money in the right marketing strategies to drive success to their businesses. Leon Sanyange, CCTV, Kampala.
Let's make a quick pit stop through currencies. We're focusing on East African currencies this time around. The Ugandan and the Kenyan shillings will, of course, come under the usual customary end-month pressure as importers, of course, try to lock up any pending inventories and any pending end-month dollar demand. That should be fairly interesting to keep a close eye on, and there will be plenty of action in the markets next week. But that's it for this edition of Global Business Africa. Send your feedback to the program at globalbusinessafrica@cctv.com. You can also check us out on Facebook and on Twitter. The news continues over there 24/7 when we're offline. Thank you for watching. We'll see you on Monday.